Hi everyone, welcome back to another QBO tip. Last week I went on a little bit of a rant about closing periods and why it's so important. This week we're talking trade-ins. Specifically, if you're giving a customer credit on one of their sales for the trade-in value of some other inventory item that you're receiving, how do you book that? With that, let's jump right into the test company and take a look. Okay, so we're back in good old Craig's Design and Landscape. Let's say we're building a customer a new water feature, but in doing so, we're getting rid of a big accent boulder. Those things can be pricey, and we can use it on another project. So we offer our customer a bit of a discount in order to take that off of his hands. Now, how do we do this in QuickBooks? First of all, we need an inventory item for this trade-in. If we have an existing one, great, we can use that. If not, we're going to have to set one up. So let's set up an accent rock as an item in QBO. So I go to my products and services and I add a new item. It's going to be an inventory item and we just fill out the details. It's an accent rock. I'm not going to worry about categories, but if there was a category, you could fill it all out as if it's a normal inventory item. Inventory asset account, default. Again, if you are using multiple inventory accounts for different things, code it accordingly. Same thing with the income account, same thing with the expense account down here. If it's going to be a taxable thing on sale, you can do your sales tax category. If you know what the standard sales price is going to be, you can set that or the standard cost here as well. For this demo, I don't need it. I'm just going to leave those blank, which is completely fine. Now that I save and close, it wants my initial quantity on hand. Forgot that one. It's 0. I don't have any. Same with my date. As of today, we have 0. So now we have the inventory accent rock here, and we have no quantity on hand. Now that we have that, let's go over to customers. I already started creating an invoice for Diego over here, so we'll go into him, and we have an invoice for him already started. So all we really need to do here is add one line. So we're going to use that accent rock, and we are receiving. So the quantity is going to be -1 instead of the normal +1. And we're going to give Diego 150 bucks on this, and it's not part of the tax building. So now we see that our balance due went from $11.50 to just $1,000. That's all we need to do. We can save and close, save and send, whatever you need to do with Diego here. We're all set to go. When Diego gets his invoice, he'll see that here's what the total amount was, here's that accent rock we took off your hands, and here's it coming off your invoice, what you owe. He sees the credit right on his invoice. Great, transparent, good communication. If we go to our products and services now, we can see that we do have 1 on our quantity on hand here. So it did receive the item, and it received it at $150 for the cost, which will go into the inventory asset account and will also be our cost of goods sold on sale. So you're all set. 2 variants I would point out here is if you're over in Diego and you don't normally do invoices, if you're taking payment at the time of sale, you can do a sales receipt. Works exactly the same way. The second variant is if Diego wanted to hold that credit on account for a future use, instead of adding it to the invoice here, we would have just created a credit memo using that accent rock for +1 and that $150. That's it. I hope that helps you guys out. Thanks so much for watching.